Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And I'm Jade Walle.
Hey, FAIRtax Guys Plus One, which could only mean that it is time for our quarterly excursion into Walle's FAIRtax world. Good to see you there, Jade. How you doing, bud?
Hey, good, Bob. Good to see you.
First things first, I'm not sure that you've officially met Bob Scarborough yet, have you?
I have not. It is good to meet you virtually, and I would love, if I'm invited to one of these days, it might be years in the future, sit down with you all face to face in the North Carolina studio and do a real episode live together. Wouldn't that be fun?
Oh, that sounds great.
Anytime.
We've been doing it in July, but we decided the last time, since the fair is there in October, we'll go in October, and then we can go to the fair and just eat all the candy apples and stuff like that.
Turkey legs.
Okay, well, yeah, your famous turkey legs there, but we need to get moving on here real quickly. But right quick, Bob, just before, here we go. About next week's program, I'll get it together here in just a second. We've got another FAIRtax candidate pledge signer. Go on that real quick.
Candidate Jonathan Mitchell from District 8 signed the FAIRtax pledge, and we will be speaking with him in one of our future programs. The next program that we have on the air will be with Jonathan, and it's a great opportunity to speak with somebody who is running and it is committed to run with the FAIRtax as part of their platform.
Excellent. And that is going to be your first episode of putting your interviewing skills to work. I'm going to assign you that one.
I'm excited.
You're ready to go. All right, well, let's dig in here. We got a long way to go and a short time to get there. As we have mentioned before on FAIRtax Power Radio, we're always open to having listeners submit questions or topics that they would like to see treated on the program. And one guy after the last Walle's World come and said, have Jade dig into what happens with the national debt with a FAIRtax. And so I think Davey Crewcut, I don't think we really got his name. I think that was his screen name that asked that question. So Jade, you have decided to tackle this listener's question. And before you dig in, how about a little bit of history of what the national debt has looked like over the years?
Sure, Bob. I came across an article recently from Kimberly Amadeo, dated October 12th on thebalance.com. And currently our national debt is $28.4 trillion. And to put this mammoth number into perspective, if you each had a benefactor that loved your radio voices so much that they opened up a bank account and let you access $1 million a day with the condition that you must spend that $1 million each day, do you know how many days it would take you to spend that $28.4 trillion?
I got a feeling you're fixing to tell me.
I'm going to tell you, it would take 77,808 years to spend that much if you spend $1 million a day. Let that sink in for a minute.
Mercy.
Another way to think about it, another way to think about it is if we take our approximately 330 million U.S. residents and divide by the 28.4 trillion, then we have over $86,000 of debt for every man, woman, and child in the U.S. So I'm going to have to go ahead and ask you both to write your $86,000 check to the U.S. Treasury now. And as a convenience, you can go ahead and make those checks payable to the Jade Walle Vacation Fund.
We still got a trip to the lake house that got flooded out last time we were out there. I'll do that on that condition.
Okay, deal.
Oh my goodness, those are staggering figures. And by the way, I just had a moment to make a motion to my secretary to get that check out to you.
Understood.
Presidents have contributed the most to our national debt over the years, Jade.
The top 5 presidents that contributed the most to our U.S. national debt. And let's preface this answer with the numbers that we're going to go through here. Let's preface it with the obvious fact that $1 today isn't worth as much as $1 in the early 1900s. So the article I referenced has analyzed the top 5 presidents from the perspective of how much debt they added as a percentage relative to the debt they inherited when coming into the office. Kind of a neutralizing way to look at that. Another qualifier, each president inherits nearly a year of budget from the previous president before the new president's budget and spending goes into effect. A quasi rollover effect, if you will. So let's dive into the top 5 debt contributing presidents of all time. And we'll start with the largest contributors to the debt based on percentage increases first. So drum roll would yield our first president, FDR, 1933 to 1945. He added $236 billion to the 22 billion he inherited from Herbert Hoover, a over 1,000% increase. And 236 billion doesn't sound like a lot now, and we'd take that in a New York minute if we could. But the percentage increase was over 1,000% in that time period. Number two, Woodrow Wilson, 1913 to 1921, added 21 billion to the 2.9 billion he inherited from William Howard Taft, a 723% increase. Very big. Ronald Reagan, number three. Ronald Reagan, 81 to 89, added 1.9 trillion to the 998 billion he inherited from Jimmy Carter, a 186% increase. Number four, George W. Bush, 01 to 09, added 5.9 trillion to the 5.8 trillion he inherited from Bill Clinton, a 100% increase. And Barack Obama, 09 to 17, added 8.6 trillion to the 11.9 trillion he inherited from George W. Bush, a 74% increase. So we've gone from 1,000% increase with FDR down to 74% for Barack in the top five there.
Oh, but the actual numbers are just off the charts. And the one thing that's jumped out at me from looking at this list, this appears to be a bipartisan issue. You can't really blame that on either party.
That's right. Just as the FAIRtax is a nonpartisan platform, as we can see from the list, our runaway national debt is bipartisan in nature, and both sides of the aisle have plenty of blame for our current 28.4 trillion debt. Our system is so far gone that it has generated its own inertia. And if we use some terms from physics, if we haven't passed the event horizon yet, where we're extremely close, I tell you, meaning we're somewhat to the point of being subsumed into a vortex or a black hole whose gravity is impossible to escape. And this doesn't bode well for the future of our country and our progeny.
And we've got to protect the future as best as we can. Our last president, Donald Trump, wasn't on the top 5 list. How do you explain that?
You're right. Although not on the top 5 list percentage-wise, Donald Trump from 2017 to early 2021 added 6.7 trillion to the national debt, only a 33% increase, which was less than half the percentage increase from his predecessor, Barack Obama. This 6.7 trillion in new debt is no small matter, though. This new debt was largely driven by spending in his last year related to the virus that originated from Wuhan, China, that we all know about. Mm-hmm. We should take note here, though, because if our nation's first businessman president, who prides himself on getting good deals, paying as little as possible for goods and services, as we all should do as good stewards of our resources, if he could not escape the pull of our increasing national debt, then is there any hope to reverse, stop, or at least slow the growth in our national debt?
Well, I don't know. That's the question I was going to ask you. What's your opinion? Are we headed into the vortex, or is there a way out?
I don't think our current system can sustain this path much longer. The average guy or gal might come along and ask, well, how do we spend money we don't have or bring into the treasury? If we don't bring it into the treasury, how do we spend it? Where does it come from? The short answer is that our federal government auctions off billions and now trillions a year in treasury notes and T-bills, which are debt instruments. Mm-hmm. Other countries, companies, pension funds, mutual funds, insurance companies, endowments, and other entities purchase our U.S. national debt because in the past, it has generally been thought to be the surest guarantee of safety and some small return in the form of a coupon or interest on the debt. So when a $100 billion T-note comes due, we basically can't pay the principal back we owe unless we issue another $100 billion T-note or T-bill. Does this sound scary?
Yeah.
Well, in 2011, S&P downgraded our U.S. debt from AAA, which is the highest level, to AA+. There have been recent rumblings that another downgrade could occur as well. Now, the S&P AA+ is still investment grade with a deemed very strong capacity to repay. But imagine that our debt keeps growing to the point where the debt holders just want their money back, and there aren't enough entities willing to purchase more debt to handle our insatiable spending appetite. This would lead to what is called a failed auction. If this occurs, the entire house of cards falls down, and imagine your worst case scenarios for American life, because they'll be happening real time in front of our eyes. So going back to your question, no, I don't believe our current system can heal itself. We need a major shakeup, a significant jolt to the system in order to slow, stop, and reverse our out of control national debt and reverse our inevitable path to oblivion.
Well, Jade, our current path seems unsustainable. We kind of know that it is. We're out here in the real world living it every day. Now, this is a leading question for you, but outside of fiscally conservative spending, which we obviously don't have the capacity to entertain, what jolt the system might help stem our growing national debt?
I'm glad you asked, Bob. There are two primary aspects to the national debt calculation, and I think we all can figure this out: the inflows and the outflows. Over our nation's history to date, our outflows have exceeded our inflows by 28.4 trillion. While our proposed new tax system, the fair tax, has nothing to do with the outflows part of this equation, it is an entirely different way to collect the government's inflows. So let's jump into how this might affect our national debt. To answer your question, the fair tax is a revenue neutral concept and is configured to be a national sales tax rate that brings in the same revenues to the U.S. Treasury that our current income and payroll tax system does, as of a year or two ago, about 3.3 trillion a year. On its surface and in the Fair Tax Act itself, there's not one word about federal spending or reducing or increasing it. It is simply a different, more efficient and practical way to bring in our needed U.S. Treasury receipts. However, there are several indirect concepts, if you will, that I contend will lead to an eventual decrease of our growing national debt and annual budget deficits. The concepts, and there are too many to examine in totality today, include 4 items: the effect of drastically reduced tax evasion on our national debt, the effect of dramatic U.S. economic expansion on our national debt, the effect of eliminating virtually all income and payroll tax compliance costs and time spent, and lastly, how the fair tax affects the overall transparency of our U.S. Treasury receipt system and the ultimate effect of this on our national debt.
Well, I got to tell you what, you have hit on one of my favorite things about the fair tax. We talk about tax evasion all the time here on FAIRtax Power Radio. We have studied we've mentioned the Dr. Sebula study showing the tax evasion. It's now, the IRS is now admitting that it's the tax gap, the difference between what is owed and what's collected is close to $1 trillion a year. And I really love the aspect of the fair tax of getting rid of most of the evasion, because we've just got a real problem there. So how does the fair tax affect evasion?
With the fair tax, there will be less evasion, which equates to increased tax collections, which yields less of an annual budget deficit, period. This works to either reduce the national debt or decrease the rate by which the national debt is increasing, assuming all else is equal. So, based on the recent 2017 PhD study by Dr. Sebula you mentioned, there's currently $700 billion or so a year illegally evaded by Americans. But given the dynamic gig economy we live in, this is forecasted to grow to $1 trillion by 2026, just 6 short years away. The illegal evasion rate is growing exponentially faster than our own US GDP.
Well, I'm sitting here just stunned by these numbers. And I think, the way politicians probably think about this, they don't put all those zeros. They talk in dollars, pennies, 20s, 30s, 40s, 50s dollars instead of millions, trillions, et cetera. Outside of the obvious depravity of our human condition, why is tax evasion growing so rapidly?
I have a theory on this. We can learn a lot by studying history. The Wealth of Nations was written in the 1700s by Adam Smith, and in it he states, "The property which every man has in his own labor, as it is the original foundation of all other property, so it's the most sacred and inviolable." And so let's explore what this means in the context of fraud or theft, which is what illegal tax evasion is. Financial statement auditors, for example, learn in generally accepted auditing standards about a concept called the fraud triangle. We find in business,
You've mentioned this before.
I have, and it really plays in here. When 3 aspects are present: pressure, rationalization or justification, and opportunity. When those 3 aspects are present, fraud is bound to occur and frequently does. The key aspect in the definition of fraud is that it is an intentional act, like intentional illegal tax evasion is, as opposed to legal tax avoidance or accidental error. So the first aspect here, pressure. This is also sometimes referred to as incentive. This aspect of the fraud triangle is always present with human beings and has been as long as we've been on Earth. All of us can feel pressure or feel incentivized to cheat. In this case, as it relates to defrauding the US government of the taxes it's due by not filing a tax return, by filing a false tax return, usually in the form of excess deductions or underreported income earned. Perhaps someone has a gambling problem, mistress, or just out of control bills at home. The pressure that mounts from these circumstances, often brought on by our own behavior, can be significant in the fraud equation. Second, rationalization. The Adam Smith quote we just mentioned really digs deep into our human psyche. If we perceive our hard work, our labor's reward, our paycheck earnings as the most sacred and inviolable property that we have, it is easy to see how we're all hardwired to rationalize and justify our cheating of the income tax. We're not encouraging anyone to do so, but it's easy to see how a small business owner, for example, trying to make ends meet, take care of their family, pay for school, medical bills, dance class, etc., can rationalize in their mind how the government spends on foolish things anyway, how paying the employer matching an employee portion of FICA self-employment taxes seems excessive, and how they feel they already pay enough in taxes. With this mentality, it's not a big step to reporting excess deductions. Perhaps that personal vehicle becomes a business vehicle, or underreporting income, not reporting as income some of the business's cash receipts, for example. These are simple examples, and most small business owners report and pay their tax correctly. I want that to be stated. But all in all, there's over 20% of the nation's annual tax revenues due that are never collected, which total $700 to $800 billion a year right now, quickly move into $1 trillion based on the study previously mentioned. The income tax aggressively goes after what we perceive as our most sacred property, which right off the bat is a bad focal point for any treasury system to base its tax collections on. Yeah. Well, we made a mistake 108 years ago with the 16th Amendment in 1913, but we're smarter now, and perhaps our sophistication of the psychological sciences has advanced. So let's go to opportunity, the last leg. The most critical leg of the fraud triangle's three-legged stool is opportunity. If opportunity is removed from the equation, fraud or theft cannot happen. For example, if an employee feels pressure and can rationalize that he or she needs to steal from the business's cash register, if the drawer is locked with the CCTV monitoring in place, the opportunity to steal is removed or reduced to an acceptably low level, and fraud and theft usually does not occur. Under the fair tax, the vast majority of opportunity to defraud our U.S. Treasury is eliminated because we're no longer on our honor to report our income, claim our deductions, and remit our taxes. Tax evasion is virtually eliminated under the fair tax, as 1.3% of all U.S. businesses, only 1%, which account for 75% of our gross U.S. receipts for purchases at the retail level, will allow enforcement to be concentrated on large vendors. Think Walmart, Best Buy, Target, Starbucks, and Amazon. And historically, these large companies have never had issues collecting a state sales tax at the register or checkout page, and would not want to risk enforcement actions, bad press, and scrutiny for absconding with fair tax receipts. The fair tax basically eliminated 150 million individuals and nearly 100 million businesses from being tax collectors for the IRS, which by itself takes the hazard out of play, so to speak, as it relates to opportunities for tax evasion. Plus, the retail vendors in 50 states that collect the fair tax and remit to the Treasury get paid for collecting taxes. 0.25% of their collections are kept by the vendor and the state for their troubles. And I'm not sure about you, but last time I filed my tax return or made estimated quarterly payments to the IRS, I don't recall receiving any kind of payment for my troubles, which are extensive and time consuming, by the way, equating to over 8.9 billion hours a year we as Americans spend on tax compliance. Now, we have around 80 million tourists visit the US each year. Under our current income tax system, they don't owe a dime to our US Treasury, and that's fine. However, let's think about what America does for the world's freedom and how the fair tax might not only decrease evasion, but increase our Treasury's collections for a different reason. Under the fair tax, everyone and anyone in the US, whether we are citizens visiting here for tourism, legally immigrating here, or staying here illegally, anyone who spends money on new goods or services, whether they gain their income from legal law-abiding salary and wages or underground illegal and otherwise nefarious means, will pay the fair tax as they spend money. Under the fair tax, foreign countries protected by US interests finally pitch in a little to the cost of our U.S. national defense that inherently protects them, their businesses, economy, family, and freedoms. That's pretty neat.
That's quite a mouthful too. Now you wrote a paper about this that's published on fairtax.org, did you not?
I did, Bob. My September 2020 report, available in the research tab at fairtax.org, concludes, based on sales tax evasion studies and the Dr. Sebula study we discussed earlier, would be 41 billion a year rather than 781 billion a year. This is a 95% decrease in evasion under the fair tax. What this means...
Say that again.
Sorry. Yeah, a 95% decrease in evasion under the fair tax relative to our current income tax. And this means that tax evasion would still exist because, like I said, there's human beings involved, but the configuration of our tax system, from not taxing what is sacred to us to the retail collection mechanisms and the drastic decrease in the number of tax collectors, retailers rather than businesses and individuals, will lead to virtually all legally owed U.S. taxes being collected by our Treasury for the first time ever.
That's amazing, and it's great news. It's something that we all think about when we talk about changing from income to consumption as far as tax collection. The only fear we all have is that if we collect everything we're due, that our government would then justify spending even more money on other frivolous things. I mean, they've got a sack full of gold sitting up there. I have a feeling we'll address that risk a little later, though, won't we? And next question is the second aspect of how the fair tax would reduce our national debt. Jade, can you discuss the effect of the fair tax on economic expansion for us?
I sure can, Bob, and we could almost do a whole show on this, but I'll try to make it concise. Bottom line is our U.S. Treasury will collect more in tax receipts in a booming economy with the U.S. as the tax haven of the world, as opposed to an economy that is not booming. Many of the grassroots funded studies of how the fair tax would affect the U.S. upon enactment were conducted by the former head of the Harvard Department of Economics, Dr. Dale Jorgensen. And so we're not talking about lackluster research here. Here are just a few of the many stats and the results as to how the fair tax would affect our U.S. economy when it replaces our antiquated income and payroll tax system. 1, real wages rise 10% after years 1, 10, and 25. Disposable personal income is up 2% year 1 after enactment, 9% by year 5, and 12% by year 10. Disposable personal income up 12% after 10 years of enactment. Consumption is up 2.4% year 1 and up 12% by year 10. And the US GDP increases 2.4% year 1 and is up 11% by year 10.
Wow, and we're doing good to get 4% under the income tax. That just for comparison.
Absolutely, I think 3% would be good, and really until the last 4 years, real wage growth had been stagnant in the U.S. for decades, and when factoring in inflation and the like, it did go up, but when you do factor in the inflation, it's basically flat, and really until the last 4 years. Even in the past 4 years, and not to complain, but the 2 to 3% real wage growth these past 4 years has done wonders for our economy. But just imagine 10% real wage growth and the effect to our national morale, the effect on working families, our lower middle class, and the overall economy as it relates to consumption and increased disposable personal income. Now, the fair tax cannot keep the burgeoning U.S. Treasury coffers from being spent foolishly. Bob Scarborough, you mentioned that a few seconds ago, but it does drive greater collections that are not factored into the current fair tax rate, which is based on a status quo economy, meaning the fair tax research, which calculated the needed national sales tax rate, does not factor in aggressive U.S. economic expansion, irrespective of the economic studies that highlight that the fair tax would in fact yield an economic expansion in the U.S. unlike anything ever seen here before. For those skeptics, the key point that boils it all down is the fact that the tax base under the fair tax nearly doubles relative to that of the income and the payroll tax. Now, these are stale figures, but the current income payroll tax base is approximately $5 trillion, whereas the fair tax consumption tax base is $9 trillion. Although consumption is made up of income, borrowings, savings, and theft, while the income tax is only comprised of income, the actual income subject to taxation in the U.S. would be much higher if it weren't for the multitude of exemptions, exclusions, deductions, credits, all of which lower our otherwise large income tax base down to only 5 trillion. Under the fair tax, there were no longer any economic tax evasion or avoidance, but no economic advantages to keeping money offshore. This will result in trillions being repatriated to use in our US communities, our charities, our businesses, our economy as a whole. A few years ago, Alan Greenspan, again, no slouch, was asked how soon the estimated 14 trillion then in offshore funds would repatriate under a US fair tax regime. And he replied that it would be a matter of weeks or months as opposed to years or decades.
Wow.
All aspects of the underground economy, which is estimated at trillions of dollars annually, see the light of day and are finally taxed under the fair tax, since criminals or others who might be in the country illegally have to consume to live and will finally pay their full federal burden at the cash register, expanding the tax base significantly relative to our income tax. Another unexpected fair tax economic stimulus is that the US goods immediately become more competitive relative to their non-US competitors from other countries. How and why does this happen, you may ask? Well, the fair tax acts as a dagger in the heart of the trade deficit, since all embedded taxes are removed from the cost buildup and ultimate selling price of goods produced in the US and exported abroad. As an example, when European countries and many other countries who employ a VAT tax, when they export their goods abroad, their governments refund the built-up accumulated VAT taxes to the local producers, thus lowering the price of those goods being sold, effectively eliminating embedded taxes from their retail cost abroad, making those goods much more competitive relative to the US goods, in making them lower priced most all of the time. Historically, since the US is the only one of 30 OECD members that is not a VAT tax system, our embedded income and payroll matching business taxes included in the goods produced in the US are ingrained deep down inside somewhere in the cost and resulting retail price of those goods we Americans sell abroad. This has kept the US at an incredible disadvantage relative to the rest of the world for decades, while also manifesting itself in other ugly ways, such as reduced R&D and reduced innovation, reduced distribution to owners and investors. That means lower 401k and IRA returns for senior citizens. And the ugliest of them all, reduced employee salaries and wages. With the fair tax, US produced goods will finally be able to compete on a product's merit, its utility and usefulness to the consumer, as opposed to having an automatic 22% cost disadvantage relative to the rest of the world. This would truly make America competitive again, something that our current tax code is incapable of doing. Another aspect of US economic growth will come from the fact that the current uber regressive payroll withholding taxes on our working poor will be completely eliminated under the fair tax. Our regressive payroll tax makes up greater than 40% of our US Treasury's tax receipts, and 75% of Americans pay more in regressive payroll taxes than they do in income taxes. It's
no
incredible the burden. Yes, it's incredible the burden the working poor and middle class families shoulder. 40% of our Treasury receipts as it relates to our inflows. The working poor will finally get a leg up, being able to keep their entire paycheck without the federal government demanding that the working poor pay nearly 10% of their earnings off the top first thing to the US government in the form of FICA and Medicare payroll withholding taxes. Now, the working poor in our country, armed with the hottest economy in world history, rising wages, increased purchasing power, a full fair tax prebate received at the beginning of each month, and no regressive payroll tax withholding, that is, a full paycheck to take home, will be an incredible economic stimulus in and of itself. We know that the mental health issues play an increasing role in the horrible homeless epidemic affecting many large US cities. Outside of these worthy issues, which are beyond the scope of the fair tax, many homeless and marginalized Americans will be able to truly have a shot at breaking the horrible cycle of poverty due to the fair tax's effect on the US economy and particularly our working poor. Economically speaking, we all know deep down in our soul that the current income tax is a 75,000 page plus monstrosity that was written by millionaires for millionaires, with over half of Congress currently at or above the millionaire designation. The common rule that plays out is that the top 20% of earners receive approximately 80% of the deductions, write-offs, exclusions, exemptions, and carve-outs, such as the home mortgage interest deduction and retirement savings deductions. When the fair tax is enacted, despite the onslaught of K Street lobbying opposition that will have been overcome by we the people, there will be no more special treatment for offshore accounts, no repatriation of funds gimmicks, no advantages bequeathed to us because of a certain behavior we start or stop doing, and no special deductions for the wealthy among us. Everyone, and we mean everyone, will finally be treated fairly, the same, with no winners and losers. The only losers, if you can even call them that, are what would be described as the ultra wealthy, like a Warren Buffett or a Mitt Romney. The uber wealthy don't earn a paycheck anymore and they receive a W-2. They don't receive a W-2 and they don't have payroll tax withholdings. They likely live on investment returns, which currently receive a much lower capital gains tax rate. Under the fair tax, as the wealthy spend like the wealthy usually do, which is quite a bit, they will be paying the highest effective fair tax rate relative to working Americans, because with the prebate mechanism, the more you spend, the higher your effective tax rate. Finally, the Warren Buffetts and the Mitt Romneys will be paying into Social Security and Medicare, which they have not been doing under the current system since the day they stopped working as an employee. Mm-hmm. As far as senior citizens go, our economy, within our economy, our elderly's net purchasing power will increase dramatically after fair tax enactment. Social Security checks will no longer be taxed by the U.S. government, and any retirement savings can be freely spent with no limitations, early withdrawal penalties, and no taxation on income that currently they're having to recognize when they withdraw funds from their 401k balances. Coupled with the prebate and no tax withholdings on any retirement jobs, senior citizens will see a large purchasing power increase under the fair tax. The question or conundrum that the fair tax will not remedy is, if an influx of Treasury receipts come into our national coffers, how will Congress utilize the funds? That is, will they work to pay down the national debt? Will they increase spending on government programs, shore up Social Security so it doesn't go defunct by 2033, as is currently estimated by the Social Security Administration? There are many scenarios here, all of which are dependent on the speed of U.S. economic growth and expansion after fair tax enactment, which, according to some of the brightest economic scholars from Harvard's economic department, would be immediate, expansive, and exponential over time. This question of what do we do with all the extra money coming in is what we call in the business a good problem to have. So lastly, I know I'm going on a long time here, but lastly, as it relates to the economy, it is settled science that all learned economists agree that 3 items promote economic growth: replacing the income tax with a consumption tax, check; replacing a graduated rate system with a flat marginal rate system, check; and 3, lower marginal rates with a broader tax base. The fair tax hits all 3 of these economic growth requirements, not only out of the ballpark, but completely out of the stadium.
Oh, wow. Well, I tell you, it just is common sense that a booming economy is good for everyone, including the U.S. Treasury. We've seen that happen in the past. You know, the tax cuts, rate goes down, dollar collections go up. People think that's counterintuitive, but we've seen that in history time and time again. And I love to say that the fair tax is going to be rocket fuel for the economy. And I think you've just poured a little rocket fuel on that fire. Dig into something else that we like to talk about here on FAIRtax Power Radio that a lot of people don't really understand, and that's the compliance costs of the income tax versus the fair tax.
Agreed. Now, the first 2 aspects that we talked about, as far as the effect on our national debt, reduced evasion and economic growth, those are by far the meatiest. And if we had to weight the 4 reasons we're talking about today, I give them the highest weight. But we don't want to gloss over the amount of time and cost we spend complying with this monstrosity of a tax system here. And just for some numbers, tax compliance costs by several studies estimate that it's about $600 billion with a B a year, and about 8.9 billion hours a year spent by companies and individuals. And that would be dramatically reduced. We're talking a 98, 99% reduction under the fair tax. Those compliance costs and hours go away. Now remember, these $600 billion in compliance costs are another cost that will fall out of the current system that ends up in the retail price of goods and services we consume. The underlying studies that highlight the 22% of the cost of the goods we buy are currently embedded taxes. They do not include this $600 billion of compliance costs. So what does this mean? costs of goods and services will actually fall more than the Harvard study indicated, as the FAIRtax books indicated by Neil Bortz, given it was a conservative model that did not incorporate the elimination of these excessive compliance costs. There are roughly 100 million US businesses on average, which is kind of amazing how entrepreneurial we are. 330 million men, women, and children in the country, about 100 US businesses. And they include corporations as well as small businesses and mom and pop sole proprietorships. But 100 million, that's quite a bit. Only 2.5% are retail businesses, like to sell to the end use consumer. Think of a grocery store. This means that 97.5 million out of that 100 million will have no tax record keeping obligations relative to their current tax tracking, bookkeeping, and remittance responsibilities. The ultimate effect of reduced tax compliance costs, 600 billion a year and 8.9 billion hours of time spent complying, will be to organically and elegantly promote greater good being done with these 8.9 billion hours and 600 billion in costs, which have a direct effect on our economy, with unprecedented worker and business productivity gains, resulting in even more fuel being injected into our economy. The side effect, which is actually a positive in this case, unlike the prescription drug commercials we see with hard to believe side effects all over the place, is that Americans will have more time to focus on our simple tax system, ensuring that any politician's attempt to pollute the fair tax with amendments, loopholes, exclusions, exemptions, credits, or deductions will be noticed and objected to by the electorate. While right now, many of us are not trained as tax attorneys or CPAs in today's income tax world. We just simply throw our hands up in the air and hope the income tax code changes every few years. And we hope those changes don't put us too far behind the 8 ball. This leads us to the crescendo of the fair tax as it relates to our national debt.
Sorry to interrupt you there. I'm sitting here as a small businessman myself, run a company that has radio broadcast interests, and the amount of time that I spend on a quarterly basis dealing with tax issues on an annual basis, and then I have to turn around and look and put my personal hat on and receive from the company the pluses or minuses that take my money after I've earned it from the company, and then pass that on. So the time that's spent is a phenomenal game changer for entrepreneurs who have a great idea and the passion. They may not necessarily have the time or the expertise on the dollar side of things, management at that level.
Agreed, Bob.
You're talking about.
I can relate. My wife is an interior decorator, and she's great at what she does, but she doesn't like numbers. And I would do the QuickBooks entries for her. And if she didn't have a CPA husband who knows just enough to be dangerous on how to do business taxes and everything, I don't, it's almost to the point now where you're crippled or you run the risk of having major tax investigations because you don't do it right, not by intentionality, but just by accident. And that just seems counterintuitive to the America that was created to be the most friendly business environment ever created in the history of the world. And we're getting away from that, unfortunately. And your example points right to it.
What's the crescendo that you're talking about here?
The crescendo goes, yes, it goes into our fourth point we talked about. And with one fair tax national rate and prebate schedule, any changes to the tax system will receive unprecedented sunlight, scrutiny, and public interest. And so we're talking about the concept of transparency. Currently, there is federal spending, but there is also the ability to reduce net treasury receipts through the tax side of the ledger, so to speak. For example, and this is where the normal American, the eyes roll into the back of their head because it starts to get complicated and it's hard to follow. So I'll just try to boil this down. 75% of home interest deductions only benefits the top 20% of U.S. earners. This is one of the largest components of the roughly $5 trillion in reduced income tax base referred to earlier, which reduces our Treasury's pot of money, so to speak. But it is not a federal spending earmark per se, because the check going out the door is not to a vendor or supplier, but to you and I who itemize our home interest deduction in the form of less taxes payable to the U.S. Treasury, a collection earmark, if you will. This tax side of the ledger will be completely eliminated under the fair tax, meaning that a great deal of the smoke and mirrors of the current income tax system will be completely gone. Only true federal spending will be at issue, which will be, by default, receiving a heightened attention and scrutiny. The existing phenomenon of our country's deficit spending, however, will not easily go away, even with the fair tax as the law of the land. Currently, because our U.S. government can borrow, and both sides of the aisle are extremely adept at this, like we talked about earlier, they can borrow to cover all of our deficit spending year after year. The need to urgently balance our budget escapes attention because there's always money in the bank to spend on our federal programs. Let's take a different tack, though. After fair tax enactment, if a crafty politician wants to exclude certain expenditures from the fair tax to pander to a particular group, for example, let's exclude all purchases of prescription drugs and medicines from the fair tax, he or she will need to either reduce the prebate, good luck getting a groundswell of political support on that idea, or two, raise the uniform fair tax sales rate on everyone across the nation. Again, not likely a winner with the U.S. public, given every person who consumes in the U.S., which is everyone, would be personally affected. This fact, along with the protection of the prebate, untaxing spending on life's necessities, provides an incredible natural disinfectant to future political meddling with the thoroughly researched fair tax plan, which, by the way, has over 22 million of non-political grassroots research to back up its contentions and is the most researched piece of draft legislation in U.S. history. Another point on transparency is that now, under the fair tax, all federal taxes you and I pay are visible on the receipt of our newly purchased goods and services. Currently, under the income tax system, the average good we purchase has a cost that is comprised of approximately 22% of embedded taxes. This varies by industry, but when we purchase at the retail level, we're paying an immense amount of federal income taxes that have been passed on to us in the form from businesses, corporations, and their related federal business and payroll matching tax burdens along the supply chain through production. Under the fair tax, we'll pay our full federal burden at the retail level when we make purchases. So same thing, except now we'll be able to clearly see what we're paying rather than it being shrouded throughout the production cycle, manifesting itself as increased but hidden costs of goods and services we consume every day. I love that.
Oh, yeah. I tell you what, transparency and sunlight are always good, and the fair tax, in just its elegant simplicity, would shine a searchlight on how much our government is costing us. Now, we're getting along on time here. We got any final thoughts or conclusions to wrap this up with?
Well, Bob, I'd say to conclude, the fair tax is not a spending plan, but a more efficient and effective way to collect the same U.S. Treasury receipts we collect now under the income and payroll tax system. It's called the fair tax, not the fair spend. That being said, while not directly affecting our growing national debt, the effects of the fair tax enactment include drastic reduction of tax evasion and, by default, increasing tax receipts, a booming economy, the likes of which we've never seen, and by default, increased tax receipts, reduced compliance costs and related hours, and by default, more time spent on productive initiatives, resulting in economic expansion and ultimately increased tax receipts. All of these result in a perfect incubation chamber to reduce our national debt. The easiest way to get out of debt, after all, is to make more money as opposed to spending less, as most all of us can likely attest in our personal lives. Although Dave Ramsey and Clark Howard might disagree as to the best path how to get out of debt. However, that's just the reality. It's better when you can bring in more money. However, if our insatiable appetite for increased federal spending does not decrease, or at least find equilibrium after fair tax enactment, the fact that the fair tax will, by default, bring forth the greatest amount of sunlight, transparency, and scrutiny to our federal spending that America has ever experienced in recent memory will undoubtedly lead to at least a moderate curtailment of our runaway federal spending and ballooning national debt. The fact that the tax side of the ledger will be forever eliminated, along with the fact that tinkering with the fair tax rate or reducing the prebate percentages will most likely be non-starters with most Americans, help to ensure that the construct of the fair tax remains unchanged. This solidifies the tax collection system ushering in efficiency and effectiveness with little to inspect, scrutinize, or question in future election cycles. This would now leave the entire country and politicians from all sides to spend their energy on the true spending of our federal government, including to whom, when, how, and why, and of course, how we should match those federal expenditures to our overflowing treasury coffers, thanks to the passage of the Fair Tax Act.
Yeah, let's just hope that the politicians don't see that as tons and tons of new revenue and spend it all. But yeah, making more money should help if we can just get some fiscal sanity up in Washington.
And one
I
thing
agree.
I'll add in, if I could, while we're talking about the challenges that the politicians are going to have, wouldn't you say that we're putting together a list of candidates that support the fair tax and signing so on the fair tax pledge form, that by the time we get to Washington with our elected fair tax representatives from each district in the United States of America, don't you think that they're going to be the new watchdogs as the old guard changes over?
Bob, I think that's a great point. In the grassroots work that people like Bob Paxton, you, Laura McHugh have done to, I would say not recruit candidates, but solicit candidates, educate them on the fair tax, and have them support and sign pledges, that is going to result in a groundswell of support, really with the backing of we the people. So yes, to answer your question, I believe so, but we need more of it. We need more, because every politician that Bob talks to and that you talk to on your recent interviews, and by the way, Bob Scarborough, I love your addition to the Fair Tax guys. You've done a great job. You've already had the chance to interview a few people, and I think Ron Malero would be very proud. And obviously we can never replace Ron Malero. We can only succeed him, but I think you are a wonderful addition to the Fair Tax guys. And so, yes, you guys are already doing it. You both of you Bobs. And we just need more of it, and it's on all of us to do it. But yes, to answer your question, I think so.
And the challenge is how many people can we talk to in a week? Each one of us, listener, each viewer, how many people can we talk to? And the thing I liked about Ron, and Elaine is still taking care of business there in Florida, but the thing I liked about their attitude with the fair tax, and Ron's especially, but Elaine's too, the passion was on their lips every time they engaged someone in a conversation. And you got the excitement from them, and you said, I really need to check this out. The vehicle was plastered with, with logos, and Elaine always had the buttons to pass out to people, the little palm cards and the index cards with all the information on it. That's really what it's going to take. And I will challenge our viewers and listeners right now to put your name down on a piece of paper and say, I'm going to speak to 5 people this week, and write those people's names down too, and get in touch with them by phone or in person and say, hey, I want to tell you about the fair tax. Sometimes once that seed is planted, it may take a week or two for them to get around to looking at that. But I believe that that's going to be the way we do it, and it exponentially grows from there.
Absolutely. And if you would like to help, you can go to fairtax.org under the Get Involved section, open that up, and go to the Fair Tax Candidate Pledge page. You'll see all of the pledge signers. And for those that weren't with us at the beginning of the program, we're going to be talking to, or Bob Scarborough is going to be talking to another one out in Texas next week. And we got to give a shout out to our friend John Gaber. He has made it a personal quest of his to talk to every candidate out there in Texas District 8. Now, that's the seat that Kevin Brady is retiring from. Whenever you've got an open seat like that, you usually got a pretty large field of candidates wanting to replace him. And John is going to try to accomplish out there in Texas 8 what we did here in Florida 3, get just about everybody on, at least on the Republican side anyway, signing the fair tax pledge. So no matter who gets elected, the fair tax wins.
That's exactly right. That's the big thing right there. That's what it's going to take. And, Jade, this episode of Wally's World is just phenomenal. It's going down on my record book as one of the ones that I will point our contacts to. Number 198, episode 198, episode 200, and this one, as far as a comprehensive look at the benefits of the fair tax.
All right. Well, I tell you what,
Agreed.
our time's just about getting away from us. Jade, again, we know you're a busy guy, and we certainly appreciate you coming with us and visiting with us on a quarterly basis. And of course, again, we were digging into a listener's question. If you've got a topic or something you'd like Jade to dig into about 3 months from now, send it to us at the fairtaxguys@gmail.com. And Jade, no telling what I'm going to be throwing at you, but I know we'll see you again in a few months. And maybe a little early to say Merry Christmas. We'll probably see each other before then, but you know, next Wally's World will probably be near the end of January next year.
That's nice.
Yep, absolutely. Thanks, guys. Thanks for your time.
All righty. Well, all right. Well, it's going to wrap up this edition of FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And I'm Jade Walle.
Reminding you again, as we always do, that the fair tax is the only truly fair tax. And once you understand it all together, you'll demand it.
So, how much will I bring home?
Go ahead.
How much do you make? We'll just say 40,000. Okay, keep it simple. Throw out the deductions, all that stuff. So you got your 40K, right? Now the first 8,000 is going to be taxed at 10%. The 8 to 33,000 is going to be taxed at 15%, and the 33 to 40, of course, is 25%. So that brings your total to $6,345.
Okay, so the average is what?
16%. Okay, and then on top of that, you got Medicare, which is 1.5%, and then of course your Social Security, which is 6.2%. So actually, your new total is $9,405.
Which is 20.
23.65%. You're getting it. You're getting it. Don't even get me started on what the boss has to pay. He's got to pay a portion of your taxes as well, so you don't have to.
Right. And you?
Oh, you